Welcome to my YouTube classes. Today's topic is accounting for non-profit organization. Today we are going to do illustration 22. Illustration 22. So in this illustration here you have been asked illustration 22 here you have been asked to prepare a receipts and payments account and income and expenditure account. So receipts and payments account in the receipts and payments account has been given over here, and from here you need to prepare income and expenditure account. So directly we cannot prepare income and expenditure account. You have to prepare the opening balance sheet. So what are the items we record in the opening balance sheet? I have told you that the first item is the opening cash and bank balance. Okay, it is given here. The opening cash and bank balance is 3520 and 27,380. Okay, so these two things we will record first in the opening balance sheet. Cash in hand is 3520 and cash at bank is 27,380. Okay, next things are fixed deposit, which is it is given 30,000. That is also given in the opening balance sheet. Okay, so we will record fixed deposit 30,000. Next thing is all the opening balances. You have to see the adjustment. Okay, when you see the adjustments, you see the opening balance of postage stamps 750, stock of cricket materials. The opening balance is 3210, and this subscription membership subscription arrear is 6,600. So these three things, the opening balances have to be recorded. So we have here unused postage stamps 750, stock of cricket materials 3210, okay, and subscriptions outstanding 6,600. Okay, so this matter is clear. Next thing which we will do is sale of crockery. The crockery sale, the book value is 1200. Okay, so we are going to note down the book value, the crockery 1200. Okay, so debit side we don't have anything. So credit side we will do the total. It is coming to 72,660, and that becomes the capital fund, the balancing figure. Okay, so from the first balance sheet, opening balance sheet, the purpose of the opening balance sheet is to calculate the capital fund. So we have calculated the capital fund, that is 72,660, which will be required in the closing balance sheet. Okay, so after we prepare the opening balance sheet, next thing which we will do is the income and expenditure account. Okay, so what are the things we are going to record here? Come from the credit side, it is maintenance. Okay, so you're going to write maintenance, match expenses, salaries, conveyance, upkeep of loan, okay, and postage stamp. This purchase, all we have to do, you have to record this postage stamps. This is the purchase, and with this you're going to add the opening stock and subtract the closing stock. Same with the purchase of cricket materials also. Then sundry expenses we will record. Okay, so let's see how we proceed. So income and expenditure account, first it is to maintenance 6820. Okay, turn the page. Next it is match expenses. Match expenses is 13,240. Okay, next it is to salaries. Now one thing has been mentioned here, salaries, monthly salary, look at the adjustment. First monthly salary is 1,000. Okay, so monthly salary is 1,000 means 12 months salary is 12,000. It is told here that salaries is 11,000. 11,000 means 12 months salary is 12,000, which means 1,000 salary is outstanding. Okay, so let's go back to the sum again. So two salaries is 11,000. It is given in the receipts and payments account, and by calculation we have found out that 1,000 is outstanding. So the total salary will be 12,000. Okay, next it is to conveyance. To conveyance is 820. to upkeep or maintenance of loan is 4240. Okay. Next, the sum for which I have chosen this is postage consumed. What I said, what is the purchase? Purchase is the amount which is mentioned in the receipts and payments account. Okay. So receipts and payments account 1050. With that, you are going to add the opening stock of purchase of postage stamps and less the closing stock. Okay. Similarly, you are going to do it with cricket materials also. So see, purchase of postage stamps is 1050. With this, we will add 750 and we will subtract 900. Okay. Similarly, with purchase of stock of cricket materials also, purchase is 9720. With this, we will add 3210 and we will subtract 2800. Okay. So it is done. Let's see. So purchase is 1050. Okay. With this, we are adding the opening stock and we are subtracting the closing stock. So it comes 900. Okay. Same is with cricket materials consumed. How much is the purchase? Purchase is the amount which is mentioned in the receipts and payment account. So 9720 is mentioned over there. And in the adjustment, opening stock of cricket materials is 3210. Okay. We will add that. And the closing stock is 2800, which we are going to subtract and find out the final figure, which is 10,130. Okay. Next item, the last item which is left over here is sundry expenses. Okay. 2000 we will record. Investment, these things we will not record over here. Why? Because this is an asset. Okay. And tournament expense and tournament fund, these two are related expenses which we are going to record in the balance sheet. Okay. So investments we are leaving because it is an asset. So it is only sundry expenses. So your receipt side, the entire thing is done. Okay. So expenditure side we have completed. Now we will see the income side. So in income side, what are the things you are going to record? First thing is subscription. Okay. This is mentioned in the receipts and payments account, and you see something extra outstanding 6000 is given. Last year's outstanding we will subtract, and outstanding of this year we will add. Okay. So see it from the receipts and payments account. Membership subscription is 40,000. From here, see, it is told that 6000 for the year ending 2013. That means last year's subscription, what we are going to do? We are going to subtract. Okay. And this year's, next year's subscription, we are going to add. Okay. 2013-14 for this year, we are going to add. So subscription is 40,000. Okay. Last year's 2013 is last year, that we are going to subtract. So it comes to 34,000. Next, what you are going to add? You are going to add 8,000, that is for this year. Okay. So it comes to 42,000. Next thing, one important thing in this sum is, children, just have a look. It is told that in the last step, donation and entrance fees are not to be capitalized. Okay. So what does that mean? Not to be capitalized, the word means that it will not be taken to the balance sheet. Okay. So it will be treated as a normal expenditure. Okay. Which we are going to record in the income and expenditure account. Okay. Be very careful with this topic if it is mentioned not to be capitalized. Okay. So how much is the donation? It is given here. Donation is 5010 and entrance fees is 2750. Okay. So we are going to record this. So see here, subscription is over. So by entrance fees is 2750 and donation is 5010. Okay. Next, you are doing this calculation, interest on fixed deposit. So children, do one calculation. It is told fixed deposit 6% at the rate is 30%. Okay, 30,000. So 6% of 30,000, if we calculate, it comes to 1800. Do the calculation. 6 by 100 into 30,000, it's 1800. Okay. Now it is mentioned here that interest on fixed deposit is 900. Okay, so interest on fixed deposit is 900. So out of 1800 already you have received 900, and 900 is due. Okay, not yet received. So you are going to record that. So what you will write, by interest on fixed deposit, it is 900, and add accrued interest. How much it is? 900. So the total interest is 1800. 6% of 30,000 is 1800. So 900 you have received and 900 is accrued. Okay. And what other thing you are going to write? To sale of crockery. Okay. Book value was 1200 and you have sold it for 2000. So how much profit you have got? 2000 minus 1200 is 800. So by profit on sale of crockery is 800. Okay. So now do the credit side total. It is 52,360. And with this, when you subtract the debit side, you are getting the surplus. Okay. What is the surplus? 2210. Here we write excess of income over expenditure. Okay. Now let us come to the closing balance sheet. The closing balance sheet, here I said, what are you going to write? All the closing balances. Okay. So outstanding salary was how much? 1000. This you are going to record here. Outstanding salary 1000. Okay. And I told you about tournament fund and tournament expenses that we are going to record in the balance sheet. Okay. So how much is the tournament fund? The tournament fund is 20,000. You have got the fund of 20,000 where you have done the expenses of 18,800. So expenses are going to be deducted. Okay. So see here, tournament fund is 20,000. Okay. And here you will do less tournament expenses 18,800. So it finally comes to 1200. Okay. Next thing what you are going to do, from the opening balance sheet, we have got the capital fund. Capital fund is 72,660. I hope you have understood from where I have got the capital fund. The capital fund we calculated here in the opening balance sheet, 72,660. Okay. And just the surplus we calculated just now from where? From the income and expenditure account, that is 2210. So we are going to add these two figures. Okay. How much is the capital fund? 72,660. And with this we are adding the what? Surplus. Okay. Which we calculated just now from the income and expenditure account, that is 2210. Okay, done. So it comes to 77,070. So this is the liability side. Okay. Now let's come to the asset side. In the asset side, what are we going to do? In the asset side, we are going to record the closing balances. Okay. So first thing which we are going to record is the closing cash. Okay. Closing bank and the closing fixed deposit. So let's write, cash in hand is 2200. Okay. Cash at bank is 23,320 and fixed deposit is 30,000 at the rate 6%. These three things are over. Now we are going to write the closing balances of these. Okay. Unused postage stamp, closing balance is 900. Stock of cricket materials, closing balance is 2,800. Okay. And closing balance of membership subscription is 8,000. Okay. So let's write that. So unused postage stamp, closing balance 900. Stock of cricket materials, closing balance 2,800. Okay. And subscription outstanding, we saw the closing balance as 8,000. Okay. Now you must be wondering from where this 600 has come. Now this 600, children, keep in mind, it was told when the subscription was given. Okay. Last year subscription 6,000 you have received, but last year subscription due was how much? 6,600. So out of 6,600, if you receive 6,000, so 600 becomes due, which will be received this year. Okay. So you have written that 600 due with this 8,000. So it comes to 8,600. Okay. Next, what are the things? Left out items are investment. Okay. Investment is how much? 5,700. Okay. This you will record. Okay. Next, Crockery. Crockery, how much you have purchased? This is also an asset, okay? 2650. So you will record this crockery as well as the investment. Okay, so we are writing crockery 2650. Okay, this is the purchase of crockery, and investment is 5700. Okay, and how much is this accrued interest? From where it has come? See, children, we calculated 6% fixed deposit on 30,000. It was coming to 1800. In this 1800, already you have received 900, and 900 is accrued, still not received. So this you are going to record here. Okay, accrued interest is 900. So now do the total. It comes to 77,070. So your both balances, both side, it has tallied. So it means that your entire sum is correct. Okay, so hope you have understood this. Earlier, don't confused. This 600 has come out of 6,600. Okay, 6,000 you have received, and 6,000 is left for last year. Okay, and this year it is 8,000. So it together, when we add, it comes to 8,600. Okay, so the balance sheet total has balanced both side, assets and liabilities. So your sum is over here. Okay, so we will come with a new set of sums tomorrow. Okay, so let's end our broadcast over here. Thank you, children.